Hey folks, so today I wanted to give you an important update in terms of how we are posturing and sort of the amendment we've made for an important part of the market, and that is where we think bond yields could go. And that very much has a big impact in terms of our call on the equity world as well. So I'm going to just quickly move over to the yield of the 10-year U.S. Treasury note. So that's your 10-year, some people call it a bond, it's actually technically a note, but those are technicalities. And before we look at the more near-term thing, the bigger picture remains very much bearish in terms of yields. So we do think ultimately that bond yields through the lens of the next number of years could remain low, potentially even go somewhat lower due to demographical reasons. But if we look at the more near-term, and let's define near-term, when we say near-term in this case, we really mean a duration of a few months to potentially half a year plus minus. Let's call it 3 to 9 months. I'm trying to figure out my own sort of parameters, 3 to 9 months. And through the lens of the next 3 to 9 months, what we could see happening is that bond yields on a 10-year note, which currently, as I'm recording this, are just around 90 basis points or so, we would imagine that they would be able to, and here are the optics of it, so you can see this, would be able to creep probably north of 1.2% and potentially up to 1.4. The reason why this is important is because it has implications on your favorite technology stocks, which are going to do less good in an interest rate environment that is somewhat higher rates. And when I say high, it's always relative, right? Certainly not high in the long-term perspective, but through the lens of the past year or so, it's higher than it's been for at least this year. And also what this is going to happen is it's going to bring to the forefront a different part of the equity market that should perform better. And that's, one of the big things that I've mentioned here before. We do think that move into more value-oriented stocks, reopening trades, the stuff you've probably heard it before. You've certainly heard it here before. We do think that trade's going to continue to work over the next, again, 3, 5 plus potentially months. And so, if one were to look at this on a chart, basically, I could see bond yields go as high as maybe 1.4% if they want to overshoot, which gets us back to kind of where we were in July 2016 before we then rallied and then broke below that level. So I think 1.4% is kind of like a fairly big resistance point. Can we overshoot? Of course. Can we not quite there? Absolutely. It's not an exact science, but I think somewhere within the vicinity of 1.4% is possible. So if you're looking for a potential trade on all of this in terms of price action, a very simple way to look at this is through the lens of the ETF, that is the TLT. And the TLT ETF, and it is important to understand that a bond does trade differently from a stock. Nevertheless, we can apply basic technical analysis. So I would imagine that any rallies here, if TLT were to get as high as 160, maybe 162, I'm not quite sure it has it in it to go that high, but any bounce from here, quite frankly, is probably an opportunity to short TLT. I mean, maybe there's an inverse ETF out there on TLT, which I don't know. One could buy puts or put spreads. You want to give yourself enough time, so I use puts expiring a few months out. But I think this is a nice trade where you could ultimately see TLT gravitate back down towards about 150. And if you don't want to wait for a further bounce, if you just want to get into a trade like this and try to put it on for the next 3 to 5 months, again, this is not an immediate gratification trade, then I think one could already leg into this here. So big call here on our part, a little bit more than tactically, again, through the lens of the next 3 to 6, 9 months. Rates go higher, but again, they are limited in the upside. So in other words, TLT, one could short this. Again, this is the inverse, right? TLT is price, which is inverse to bond yields. So we think TLT could fall towards the 150 area, and that would be an opportunity to short that, maybe using options to lever that bet a little bit. So hope this is helpful, folks. Give us a thumbs up, subscribe, and share the love. Spread what we do here. We'll see you soon.